Good morning, traders. It's Monday, April the 20th. This week is going to be another wild one. Last week we talked about how it's going to be real pivotal in the market in terms of can it break through resistance and move higher, or are we going to see the equities roll over? And it looks like we're kind of getting a pop and drop move where we had a big short squeeze, a strong move up on Friday, and then a huge short squeeze into the closing bell. And today we're seeing the market unwind a little bit, actually quite a bit. We're seeing equities down 2% this morning, NASDAQ only down 1%. But overall, it's going to be another big week, big volatility, I think, in the market in terms of price swings. If price moves higher, obviously the volatility index will continue to fall, but it doesn't mean price won't have big volatility itself. So overall, equities down 2% this morning, and we got a lot of news and things kind of unraveling for this week. Obviously, they're talking about more stimulus, another $500 billion plan to help aid small businesses in the States. And the big key disagreement among things is when are they going to open the economy for businesses, because it's obviously just crushing so many individuals, jobs, businesses, and it just can't stay like this, or things are going to continue to get even worse. Obviously, our earnings are going to be pretty bad. Everything got slashed pretty much 33% across the board this year on the SP 500 in terms of earnings. And we're going to have the Federal Reserve today coming out with a massive dollar liquidity program, which is totaling $1.5 trillion today. 3 different injections. I wouldn't be surprised if we see the equities market potentially rally here if money is going to be printed and injected into the system. So we'll see how things go. If we look at the SP 500, you can see we've had from the high to the low, we've come all the way up to this, almost up to this 618 retracement. That is where I see it going, is to this green line up here. There is potential for the SP 500 to continue to move up, and you can see the different percentage gains. There's enough for about another 2.75%. If it can break through that, it could continue to stretch up another 10%. And more or less, this green line is not only the 618 retracement from the collapse, but it's also the same level that we saw in 2000 from the NASDAQ tech bubble when I've talked about this many times and shared my video on it. More or less, the NASDAQ fell 40% and then rebounded 46% to the 618. And that's where we are getting with this. We're seeing this ultimate spike low and this high bring us up to around 33%. There is potential for it to go up to this high over here, which is around the 43, 45, 44% if it was to continue to extend. But overall, the market should start to chatter and become unstable, and we could very easily see this roll over and sell off in a big way. But right now, we're playing these breakouts, we're playing this upward trend. And in the grand scheme of things, today's pullback, it's 2%. You can see the 5-day moving average here. We're trading at it. Overall, the trend is still up. It had a big up day on Friday, pulling back a little bit into support right now. This could easily continue to grind its way higher or even pop and rally. We'll see how things go moving forward here. Looking over at bonds. Money is going into bonds this morning. Again, they continue to consolidate in this kind of pennant formation. Overall, it's holding its ground. There's still a lot of fear. Money continues to trickle in, but again, it hasn't really popped and broken out of a pattern yet, but it is primed and ready for a big move. This type of pattern, even though it's completely, it's huge. We got this huge run up, and then we've got more or less this, you could argue this pattern here, very similar to over here. You get a run up, and then you get this kind of pattern, this consolidation. Everything gets dwarfed from big price action, but when you look at it, you can see you get a big run up and you get a consolidation, and eventually it's going to break out of one of these directions. Same as over here, big volatility in price action. Eventually it stabilized, continued to run up for the second half of its move. So you get the first rally, consolidation, second rally, and this was first rally, consolidation, second rally, which got blown out of proportion because of the market crash, but more or less we are back into a mega consolidation, and this rally was so big, I wouldn't be surprised if it really continues to trade in a big range for a long time and really work itself out. This was pretty extreme price action. Could take a while to digest that, but just keep in mind we're still in a bull market for bonds. It's been consolidating. It is at this 20-day moving average, and it could continue to move higher, but We are in equities as they've moved up the most in the last few sessions. Eventually, if bonds or safe havens take the lead, we'll be switching gears and moving over to those. Looking over at precious metals. Last week they pulled back. Obviously a little bit of money moving into them today as money is fearful. If you just look at the line in the sand here across these highs, we are into a support zone where we've had all these previous highs, a consolidation through here, finally it broke and popped, and now it's pulling back into this area, starting to find some support there today. If we look over at silver now, probably similar type of price action. We had a rally, bull flag. It's rallied up. It's forming another bull flag, and looks like it's primed and ready. I'm a little tongue-tied today. Let's take a look over at gold miners, GDXJ. A little bit of a blow off top, a little bit of a squeeze up into resistance, and a little bit of a pierce of this previous high, and then it's selling off. Overall, starting to form a little bit of a bull flag again here. Again, I think we're going to see the metals start to outperform the stock market. This is when they should start to shine. They feel like they're actually starting to become more tradable. This type of price action here, extreme volatility. We are seeing 10 to 25% moves in price gaps on a daily basis. Now we're getting into tighter range. Still have some pretty big volatility in these days right here, but overall it seems like it's starting to fizzle out a little bit. You can see the volume tapering back down. We like to see kind of more steady moves in the market versus huge volatility and massive emotional price swings. Emotional price swings bring in uncertainty and big price gaps. So this is starting to look good. We may be looking to get into the metal sector here this week as it flags out and tests support. Looking over at energies, natural gas down 2% this morning. Again, still working out this bottom, this high volatility price bottom. Overall, crude is finally really just collapsed. This is what we talked about over the last couple of weeks, that it has this headline news. It's got all this built up power in here that whichever way it breaks was going to have a big move. It was going to be 14 was the downside target, 34 and change was the upside target. So overall, you can see here it's completely collapsed today, down 35% alone. Believe it or not, the volume is really light on crude oil. It could just be the futures contract I'm looking at, but overall, very light volume on this collapse in crude. Could be that capitulation, that exhaustion low in the crude oil market, meaning it's just everyone's finally given up and there's just absolutely no demand. Nobody wants to buy the contracts and it's just collapsing, and we get this big washout low where it could put in a big spike and then reverse and start to rally out of it. A lot like what the gold miners did. They just get completely dumped and everyone gives up, and then it puts in this big bottom. So crude starting to look really exciting down at this level. Obviously it's in free fall mode, and it could very easily continue to go lower, but this is we're now in this point here where we're in a major long-term bottom zone for crude. Taking a look over at, this is the XLE, the energy sector. Now crude oil fell 10% on Friday. Energy stocks rallied 10%. Pretty big divergence between the two. Now, energy stocks have faded down. This morning they were at 32.14. So it's given back a good chunk of those gains. But overall, the energy stocks are actually holding up really well, and I think they're anticipating that crude is putting in a major bottom here. They're holding a nice pattern. Now, obviously, they're way off their highs. They are still the dog. When you look at how much they've only bounced from the high, or from the high down to the low, they've barely bounced up. You look at leading sectors like XLV, like healthcare. Obviously, everyone worried about their health. Healthcare testing up near the highs, and then you get into Netflix, where everyone's at home watching TV. Netflix has rallied 54%. It's up 14% from the highs, the all-time highs that it had before. So obviously, definitely pockets in the market where certain companies and sectors are doing a lot better. Overall, the XLE is showing signs of life, and that crude should be putting in a major bottom over the next week here, and we're going to keep our eyes peeled for a play. I do feel as though there'll be a big recovery in the energy sector stocks. If we take a look at the low, we look at the high, and this low here, there's potential for it to go all the way up to 44, which would fill a lot of voids in the market. This is a previous high where it's kind of putting in this potential base. You could argue it may start to form a cup and handle formation here. Cup and handle formation is very powerful. Actually, the way you can measure them, the depth of the cup, you can usually measure that very easily to the upside as a first target. But if it is a true cup and handle pattern, sometimes you can get 2 and 3 times the depth of the cup to the upside. Now, that is actually for just more or less bull and bear market patterns, not so much these smaller patterns. But you can always count on trying to get this 100% measured move, the depth of the cup. I always focus on the first areas of resistance and I scale out on the way up to those areas. I talked about that in a video with Silver Doctor the other day, which I shared. More or less the key is you got to scale out at the first levels of resistance in the market. Because you never know, the market more times than not will come up and hit that first level, and as soon as it has a reason to roll over, it rolls over and then never comes back. And it's hitting these first targets and then moving your stop to break even that save you. You can make a little bit of money on the trade, the rest gets stopped out at your break even entry price, and you go on to live another day. So many people go out, look for these huge gains and they hold out, and then the market collapses and falls, and they end up with a lot more losers, or they end up with 1 or 2 huge losers that wipes out all their little trades that they've got on that are kind of hanging in there. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.